Good afternoon, Futex traders, and good afternoon to all our Futex Live subscribers out there. And welcome to this FX and Commodity stream. What we're going to talk about today is we're just going to touch on where we were on Monday. Initially on Monday we spoke about a couple of stories that were playing out in the market with the US being sort of the dollar being driven by the inflation numbers from last week, the cable being driven by sort of the flows coming from the AB InBev deal and the wage growth data, the Euro and Novotny comments, and then some of the commodity currencies being driven as a result of a bounce in the commodities. And we spoke about how these stories would play out over the course of the week. So what we're going to do today in essence is we're going to start off again with the dollar, have a look how the dollar's performed Monday, Tuesday, and then what we're going to do is just talk about the key markets, where the focus is this week, where the opportunity is in the commodity and currencies, and that's going to come in the Euro, the cable, and the oil market. So we're going to talk about three unique setups, three unique opportunities, and hopefully we can, you can all gain some sort of an idea as to a trade opportunity for the rest of the week. So first thing I want to point out is this grid at the bottom. Now, what we've in essence got here is the Euro grid. Now, the reason I'm pointing this out is because what we saw over the course of yesterday and today is a relatively strong Euro. So in other words, we've seen the Euro being bid up, again, note not just against the dollar, but as you can see, this is a grid taken off today, but it's up against everything. So it's rallying against every market. Now, when you see very directional moves like that in a currency, you must pay attention because it's effectively an institutional type flow which has meaning to it. Now, what I want to point out was yesterday we saw a similar type day, yet over the course of today, we've actually seen these flows start to sell off. In other words, the Euro was very, very firmly up very early on this morning in the first 2-3 hours of the session, and we're steadily starting to see the Euro give back those gains across the board. Now, what I think people need to pay attention to is if suddenly we start to see the Euro go negative against some of the majors, because that's going to tell us in essence that theme that we saw last week, which was sell Euros, in other words, a very institutional type seller, that theme, someone could have been utilizing the rally yesterday to sell into. So that's the first thing I just want to point out in terms of flows in the currency space is what we've effectively seen in particularly the Euro market over the course of the last two sessions. Now, let's just get straight to the dollar, have a look how we performed this week in the dollar, and then get an idea of potentially what we could see over the course of the rest of the day. So let's quickly get the dollar space up here. Okay, so the first market we're going to talk about, is the dollar index. Now note, I have zoomed this in again just to put this on a daily chart. Obviously, we all know the trend by now. But what I want to point out effectively is how confined the dollar's become over the last 3 days. In other words, in terms of a net position, what the dollar's done over the last 3 days, it's flat. Okay, so it's neither here nor there. Note, this is not going to change. In other words, it's very unlikely that we're going to see the dollar very aggressively rally or very aggressively sell off until we get a very strong fundamental driver. Now, that fundamental driver is most likely to come in the form of the Fed meeting next week. So factor that into your analysis, factor that into your your strategy going forward. However, what I do want to point out, of course, is in terms of levels, we've got potential downside to last week's lows, and equally, we've got a little potential upside back up towards sort of this little pivot point in the dollar index. So on that note, just note, obviously, the dollar is moving sideways, which means we can actually pay more attention to our euro and our pound and actually take on trades in those markets. Or technical trades with quite a bit of certainty that they're not going to be impacted too much by any kind of severe dollar movement. So that's why we look at the dollar. Just to point out, obviously, as you can see, over the last, since the late August, since the Black Monday, sort of sell-off we had, the dollar's been in a 2.5% range, so very, very tight range, just waiting for more information. Obviously, the trend is to the upside, so if we do get some sort of hike or signals for hike, we should see that trend continue. But right now, continued sideways in the dollar space. Let's then turn our attention to where our trade opportunities are going to come from. And the first one we're going to talk about is the cable. Now, we've got a very unique setup here. It should be staring at you on the chart. It is a flag. It's a very nice looking flag for a number of reasons. One, we've got the aggressive pole, but then also more importantly is we've got the sideways action, or this consolidation type two-way trade, which is note being done on relatively low volume. So very important, we've got a very traditional good looking flag in this market. Of importance is also we've held that sort of that breakout point that we've been talking about, that low volume area that's holding in the market. Now, in terms of where this trade is going to come to fruition, or where we can actually execute and make some money, it's very simple, guys. Tomorrow we have got the all-important retail sales. Now, the important thing to understand is that the number is not so important. In other words, what I'm saying is retail sales is important in terms of the bigger picture. However, barring any kind of an outlier shock number, okay, so let's say the number comes out maybe a 0.1 or 0.1 lower or 0.1 higher, or something that's not really too bad or too good, we should in essence see any kind of flows that have been waiting for the risk event step back into this market. So very important is over the course of tomorrow morning, when that retail sales comes out, we will definitely be looking for long side trades. For a break of that 155.07. Important to understand, guys, it is a trend continuation pattern. Therefore, we should not be seeing sellers selling it on the break. We should only be seeing buyers buying through the break, and anyone short buying up the market. So important, guys. We've got a very nice, neat trade on for tomorrow. In terms of sort of how far it can go. Well, the bottom of our flag is 152.50, and the top is 154.80. So we're looking at roughly 230 pips to the upside. In terms of how long that would take, well, it's unlikely, given the dollar environment and given the current environment we're in, that we'll do 230 pips tomorrow. However, it could take a few days to get us up there and ultimately achieve that objective. So pay attention to that. It is a great little setup. Do note, however, guys, so important in terms of managing our risk. Once we break that 55.07, we want to see a pickup in volume. We want to see volatility pick up, but we do not want to see the market start accepting prices back inside that flag, because that then signals to us that not only one do we have a failed flag, but it tells us the market's not quite ready. And in a market that'll have a long only position on the break, we will have a lot of people that will need to liquidate, and we could very quickly move back inside that flag. So that's the cable trade. It should offer particularly, not necessarily easy, but a more straightforward type opportunity for cable traders tomorrow. So keep an eye on that, and we will obviously follow on with that in the Friday commodity stream. So that's the cable. Let's then quickly look at the euro and see how this has played out now over the course of the week. And the first thing we want to point out is obviously those flows. So we've spoken about late last week. We saw the downside flows come into the market across the euro spectrum, and Monday, Tuesday we've kind of seen a little bit of an uptick, and as you can see, that uptick has been sold back into. Now, we've seen the sellers step back into the market around the Monday highs. Now, that 114 becomes a critical level, because the longer that holds heading into the ECB, the more significance that level sort of starts to take on, because it's acting as a point of, if the market's going to maintain a short, we should not get above there. So right now, 114 is a pretty key area. I wouldn't expect to see too many buyers committing to holding sort of long trades above 114. So keep an eye on that 114. Equally to the downside, we've got the 113. So right now, over the course of today and tomorrow, we're probably going to stay stuck in this 113-14 range. But keep in the back of your mind, the play for this market comes tomorrow. Now, what I'm going to do is I'm going to zoom in this and just give you an idea of what the potential play could look like. Now, the important thing to understand, particularly with the euro, is the expectations of the ECB going in tomorrow. Now, there is a lot's been said about the expectations, but the net is that they're expecting a relatively dovish Draghi. Maybe not necessarily referencing more QE purchases, but definitely referencing the slowdown that we've seen from the likes of China, the slowdown that we're seeing in the German data particularly, and how that could potentially dampen growth and inflation expectations in Europe. So it's not necessarily that Draghi will signal anything, but if he signals any form of weakness going forward, okay, that effectively is enough for the market to say, well, okay, there is potential or a higher probability of picking up the pace of quantitative easing in the December meeting. As a result, as you can see, we're nicely tied up here. The market's sort of sitting in a very tight little range, waiting for the catalyst. and that catalyst will come on the Draghi meeting tomorrow. Now, in terms of directional play, well, obviously, we've been talking about this 114.15 as a very crucial resistance that keeps on holding. So in terms of the Draghi meeting tomorrow, the reaction, and that's why I put a question mark, the reaction above 114 is crucial, guys. If we're going to break that 114, we need to sustain those levels. So watch how the buyers interact above 114. They fail and we start to re-enter this range, and be careful because that euro is likely to have a very quick drop to the downside. So right now, our hypothesis is, so long as we maintain this sort of range and we start to move lower, we could start to see easier sell-side opportunities returning to the euro. So that's the euro currency pair, looking also relatively good for a nice, not easy, but a relatively more straightforward trade opportunity over the course of tomorrow's ECB meeting. So those are our two major currency pairs that we're paying attention to. Let's then turn our attention to something a little bit nicer. We haven't spoken about this market for a while, but it is setting up, starting to look as though it's showing us signs of a potential opportunity. Now, what we've got here is the oil, the WTI oil. And I haven't spoken about this market for a while simply because the market's gone into a little bit of a chop type range. However, it's now finally sending us some clues and some signals, and the confluence is starting to tie up. So let's talk about that. The first thing I want to point out is obviously our moving averages. Now, I don't tend to use moving averages as a sort of a timing tool, but I do like to use it in terms of a sort of a directional tool. Now, the first thing to point out is effectively the crossover that we had back in September of the 20-day moving average. So it's 20 versus 50. And we can see that the 20-day has now crossed over the 50-day moving average, and as a result, we kind of started to see prices drift a little bit higher. Now, the reason I'm particularly interested in the moving averages now is because we're finally starting to see this 100-day moving average catch up to price. Now, again, what this likely means, when you have all the moving averages coming very close to each other and there's very little sort of spread between them, it is signaling a market that is starting to drift and move sideways and maintain a certain price area. Now, that's important to understand because a lot of people are coming out and talking about oil going back to 28 or oil going back to 70, and in actual fact, from a technical perspective, it looks as though oil is likely to stay in this confined range, whether somewhere from 40s to 50s for some time, if not for the rest of the year. So with that in mind, it gives us potential technical trade opportunities. Now, the first one, which is relatively obvious, is this rising trend line that we've respected on 4 occasions previously. Now, as you can see, important on that trend line is the tails that we've seen on the daily. In other words, the market keeps rejecting and bouncing quite aggressively. And note, every time it's tested that trend line, it's posted an up day. So every time it tests that trend line, we're posting a positive day. Now, factor that in because markets like to keep using this, these patterns to lean on. Now, what I want to point out, our opportunity, it comes today in the form of the oil inventory data. Note, we did have the numbers out last night for the crushing crude, and it came out at a 7 million build in inventories, which was higher than expected. So again, there is an expectation for a higher level of supply numbers out of the oil tomorrow, which should initially get the oil to move lower back towards our trend line. But if we get anywhere near that 45 bucks a barrel, guys, make sure you keep in the back of your mind the kind of rejection we've seen in the past. Also keep in the back of your mind the fact that the moving averages are coming closer and that the market should, over the course of the next couple of weeks, just continue to move sideways within this trend channel. So that's where we're going to leave it today. That is the oil, the pound, and the euro. Have a look at them, guys. There's some incredibly good opportunities there for you. If you have any questions, feel free to tweet me. Otherwise, good luck for the rest of the day, and we'll catch up again on Friday.